Let's welcome on board Nitesh Mittersain, the JMD and CEO at Nazara Technologies, joining in on the show right now. Nitesh, hi, morning. Great to have you today on ET Now. I was just going through your numbers and, a bit of a dichotomy there because while you've seen strong growth, margins are weak. Explain what happened.
No, I think we're very much on track of how we planned to deliver our numbers. Our business comprises of our early learning Kidopia business, which is starting to take off again. Our esports business is where the margins are down, which is kind of clouding the overall margins, to about 9.7% this quarter and 10.2% for the 9 months that were ended. So I think overall the esports business, is growing at a very fast track. It's a place where we are a market leader, and to dominate that space is very important that we reinvest. So we're completely okay by reinvesting our profits and margins into market leadership in that particular space, while our other business verticals continue to contribute to the profit margins.
Good morning. This is Nayantar also joining in on the conversation. Nitish, hoping to also get some forward-looking statements from you on what the markets can look forward to. We will maybe have another gaming IPO. Let's see if it happens. But there is a lot of clarity which doesn't exist at the moment because of regulations that could come in. Now, Nazara also wants to be the info edge for the gaming world by investing in startups. Are you going to have a funding winter?
No, I think regulatory clarity is emerging in India. As you know, MeitY has been actively working on it, and we are expecting it that in the next couple of months, more clarity and guidelines will come out, especially to do with the skill-based real money gaming space, which has scaled a lot in India, but still operates in unregulated waters, I would say. So I think better clarity, better regulatory will actually allow companies like ourselves to aggressively invest, a lot more capital into the business. And therefore, it's a very positive step, very welcome step. And I think 23 will see better regulatory clarity emerge in gaming in India.
Has been the company's, sort of mantra that you prioritize growth over margins. I just want to understand what your target is for margins for the year ahead, and if you could walk us through the outlook on your ARPUs for the e-learning segment, and are you going to increase your marketing spends here?
Sure. So on the e-learning segment, our flagship product is Kidopia, meant for young kids in the 2 to 8 segment. It's a very popular app. Kids love it and parents love it. And as you would remember in the last few quarters, that business had kind of plateaued because of the Apple privacy policy changes that had happened. However, this quarter we've seen us kind of break out of that, plateau that we had, and the business has started growing again. We've also taken additional price hikes on that product, one more in this quarter in December. We moved in the last 2 quarters from a 7.99 monthly charge, $7.99 monthly charge to a 9.99 USD per month. And the market has accepted it well. So we expect, to see benefits accrue to us over the next year. And we expect this business of ours to come back to a fast growth track. Like I said, on the overall margins, if you keep aside our, Nodwin esports business, our margins are, upwards of 15-16%. But at a comprehensive level, when we include our esports business, which is on a fast growth track and is investing, our margins are coming in at about 10%. We are completely okay, like I said, with that, because it's very important that we invest for market leadership and creating the moats around us. In Nodwin, we have kind of created a 360-degree approach on esports. We are covering, you're putting the gamer in the center and seeing everything that he wants to, do. We've launched a gaming accessories business in the last 2 quarters, which has done very well for us. So I think if you're growing at the pace we are growing without, burning cash, it's a great place to be.
Sure it is. And, I just want to talk about your FY23 revenue growth guidance, which you've clearly upped from 50% all the way to 70 to 75%. But you've also moderated your EBITDA margin expectation from, 12 to 13% earlier to now 10%. So is that a clear choice? It's going to be growth versus margins, or do you stand to revise your guidance anytime soon?
No, I think we are going to stick to, our guidance for this year. The whole idea is to grow, prioritize growth because we really need to scale our business. We can optimize for margins at a later time, and we will do that. I think the only guardrail we've kept for ourselves is we do not want to burn money, or we do not want to drive growth with losses. As long as we are growing very fast while remaining profitable, I think we are okay.
Nitish, before we let you go, we've got that big event on 1st of February. Would love to get your views from the union budget, because in the run-up to the union budget, what we have seen is a CBDT chairman on record, on camera, say the budget is going to plug loopholes when it comes to any kind of tax evasion and online gaming. We saw last year how consumers were told to update their income tax returns. It wasn't a great year for the online gaming world, for the kind of rules and what all was going on. What are your expectations?
Yeah, I think the key word here is clarity. I think, the taxation should be what is right, what is a balanced approach, and I'm sure the government will do that. As long as clarity emerges, I think it will be a very positive sign for the industry.
Okay, so clarity, clarity, clarity. No grey in the union budget, only black and white. That's, of course, what all of India Inc. and all Indians want. Nitish, it's always a pleasure talking to you. Thanks so much for being live with us today and giving us the first interview post the earnings.
Thank you. Take care. Bye.